A Bond Investment Guide. Chapter 1. A Bond Guide 1. Bonds Info. Bonds are basically safe, conservative investments where you lend an institution your money for a certain amount of time in exchange for a fixed rate of interest. A bond is an investment which represents the borrower's, the entity issuing the bond, agreement to pay the bond buyer back at some point in the future with a certain interest rate. In its purest sense, a bond is loan you make to a business or government in exchange for an IOU, a promise that on a certain date in X numbers of years, the bond will mature and they will pay you back the money plus a certain amount of interest. Bonds are either issued by a government, federal government, government agency, or municipal government, or a corporation to get money to do a project or expand, and they agree to pay that money back at a future time, adding a percentage interest fee for lending it to them. They pay you the interest payments twice a year. When the bond matures, you get its face value back. Another way is that you buy a bond for a set amount of time and pay a set amount of money. In return, you are guaranteed a specific higher face value on the bond redeemable at the end of the time interval. They give you a moderate, steady return if they are government issued, as with treasury bonds and municipal bonds. Corporate bonds are not insured and carry some risk. If the company goes bankrupt, you lose the money invested in the bonds. Rating services rate bonds. If a bond is rated below BBB, don't buy it. Moody's rates them from AAA to C. Standard & Poor's rates from AAA to D. There is a secondary market for bonds, which is why they don't always sell for the face value on them. Somebody who needs money might sell their bonds at a lower price to get cash fast. All in all, this is better for some people than the wild wacky world of the stock market, which sometimes goes for decade-long slumps. What really matters is whether the bond issuer is stable enough to pay it off as opposed to defaulting on it. Bonds are the investment vehicle people go to who are happy with a 5 to 10% return per year because they have the peace of mind of knowing that their investment portfolios will be trashed, as it already has been in millions upon million of stock market accounts. Sure, you can gain big in the stock market, but you can also lose big. Which would you rather have, a 5 to 10% steady gain or a possible loss of a lot of your hard-earned money? Once you've been burned by the stock market good and realize nobody gives a damn about your losses, you might get real conservative and revert to bonds. I've seen studies done comparing investment in bonds versus investing in stocks. Because of the fluctuating nature of the stock market, the general trend is that stocks usually beat out bonds in the short term, but after 7 or so years, investing in bonds usually yields the same return as investing in stocks. Because of all the peaks and valleys in the stock market, investing in bonds over the long term generally equals the returns from the stock market. Bonds vary both in stability and interest rate. Obviously, go for the highest yielding bonds, but be wary that some bonds do default, usually the junk bonds where you are lending money to relatively risky businesses that could go tits up. Stick with government bonds and you won't have this problem. Corporate bonds generally pay more but bear more risk. You can diversify and minimize risk by buying bond mutual funds. Sometimes companies and municipal governments go bankrupt, leaving you stuck out in the cold with nowhere to go. Bonds are tied into the national interest rates. If you buy a bond at a fixed interest rate and the national rates rise, you lose potential money. The longer the term of your bond, the more you stand to lose. The trick to buying bonds is to buy when interest rates are high and falling, so you get a high yield, rather than buying when interest rates are low and rising, because you lose potential interest money. You won't get rich with bonds, and if the inflation rate is high, you will probably end up breaking even after the inflation rate is factored in. There is a penalty for liquidating bonds before they're due, hence, it's best to get intermediate-sized time terms and renew to play it safe in case you need the money. Buy bonds directly from initial offerings rather than paying commissions fees to the sellers like the banks. In my opinion, the simplest and safest bet is simply to contact a branch of the Federal Reserve, frb.gov, treasurydirect.gov, 800-772-2678, and buy your federal government savings bonds from them, thereby getting a completely safe instrument with reasonable interest rates and no broker's fees. Stagger your bonds, buying them for different terms of time. In the bond contract, the issuer has a clause whereby he can call in the bond at any time, that is, he cancels the bond, pays you the face value plus any interest payment he owes you up until that time. This call protection clause is sometimes used when interest rates drop. They can get more with the money from someone else rather than paying you the agreed upon interest rate. Calling a bond means you get a lower profit than at full maturity. When you shop for a bond, ask about its call provisions. The yield to call is the interest that will be paid if your bond is called. If it's significantly lower than the value at maturity, get a better bond. U.S. Treasury securities are not callable. Buy only bonds you expect will hold until maturity. Look for a high interest rate on a bond. The price of a bond is always 10 times higher than the price you see on a bond list. If the price says $500, the value is really $5,000. Types of bonds. There are several types of bonds. Convertible bonds are bonds you buy from a company which you receive interest on, but you have the option of converting them to stocks in the company. They offer good interest rates and traditionally less risk than buying common stocks outright. Foreign bonds are bonds sold by foreign governments or foreign corporations. Government agency bonds are hybrid privately run, government-assisted securities that are fully protected like Fannie Mae, Freddie Mac, and Import-Export Bank. Government bonds/treasury bonds covered later. Mortgage-backed bonds are bonds operated by companies like Ginnie Mae or Fannie Mae who pool the mortgages of lots of people and make bond offerings out of them. Put bonds take the risk out of the possibility of interest rates rising after you buy by giving you the option of selling the bond back to the issuer at face value before maturity. To do further research on bonds, investigate their performance over the past several years by looking at any of the bond indexes out there like the Shearson-Lehman Government Corporate Bond Index. Compare this with one of the stock indexes like Standard & Poor's 500 or the Dow Jones Industrial Index. However, don't hold past performance to the future. Things change. There are no guarantees. Try number 332.6323 or HG4651 at the library for books about bonds. Corporate bonds/junk bonds info. A corporate bond is a bond issued by any type of for-profit corporation to raise money in order to expand its business. Corporate bonds offer higher yields than government bonds, but they're riskier. Corporate bonds are generally safe. People buy them because they yield a higher interest rate than offered by CDs and money market accounts. Think of a corporate bond as a loan you make to a corporation dependent on the corporation's ability to pay. Corporate bonds are rated in Moody's and Standard & Poor's, so you can check them out to see how solid the investment is and what the current interest rates are. The interest rates are higher than government bonds. Some are very stable like utility bonds, but you are taxed on the interest you earn and the corporation could default on its bonds. You can buy corporate bonds on the New York Stock Exchange or the OTC Exchange and also through bond brokers. There are 5 categories of issuers. Public utilities, transportation companies, financial services companies, industrial companies, conglomerates. Some bonds are secured, meaning they have collateral behind them which can be taken and sold to recover some or all the costs of the bond should the company go bankrupt. Some bonds are unsecured, meaning they have no collateral. If the company goes bankrupt, you get in line with other creditors to get some money back from the assets of the bankrupt company. Different types of corporate bonds are: guaranteed bonds, a higher authority like the company's parent company guarantees that they are solvent. Debenture bonds, unsecured bonds paid back by company's earnings. Collateral trust bonds, the company puts stock and other securities with a trustee as collateral. Equipment trust certificates, equipment is collateral. Mortgage bonds, real estate as collateral. Subordinated debentures, they're lower priority to be paid off, so they have higher interest rates. Junk bonds are the corporate bonds of high-risk companies, basically bonds in risky companies that have bad ratings by raters like Standard & Poor's or Moody's below BBB. The reasons could be bad management, new company, old company in a dying industry, or whatever. The hook is that they offer high yields, but they can just as easily go belly up and leave you hanging. Sometimes they pay off though. MCI was once a junk bond company. Answers.com/topic/corporate-bond. en.wikipedia.org/wiki/corporate_bond. Municipal bonds info. Municipal bonds are bonds issued by local municipal and state governments or a government agency that you can buy at your bank or through your broker. The first type of municipal bond is the general obligation bond. Money is used by these government issuers to conduct their general business. They pay a reasonable interest rate and you don't have to pay federal and usually state taxes on them. The second type are the riskier revenue bonds, which are supposed to pay back money out of the projected revenues they're supposed to get from a specific project they're financing, like a bridge or a toll road, but they can go bust, so educate yourself before buying one of these. You can buy Puerto Rican municipal bonds free from both federal and state income taxes. Some insurance companies sell insurance for municipal bonds. Check with companies in your area for such a policy. munibondadvisor.com/bondinsurance.htm. There are no federal taxes on municipal bonds and generally no state taxes if you buy in state. Use this formula for state municipal bonds. .municipalbonds.com, Alabama.municipalbonds.com, Vermont.municipalbonds.com, munibondadvisor.com, munibondadvisor.com/bondinsurance.htm, municipalbonds.com. Zero coupon bonds/discount bonds info. Zero coupon bonds could be treasury, municipal or corporate bonds. The deal is that you get no interest on them. You buy them at a deep discount price. The price is much lower than the face value. You hold onto it until the redemption date, then get the face value for it. davidlerner.com/0-coupon-bonds.aspx, edwardjones.com/n_ca/products/investments/fixed_income/bonds_0_coupon, en.wikipedia.org/wiki/0-coupon_bond. Scudder. 175, Federal St. Boston, Massachusetts 02110. 800-225-2470. Scudder.com. They sell zero coupon bond mutual funds. Chapter 2. A Bond Guide 2. Ginnie Moss for sale. Ginnie Moss, short for Government National Mortgage Association, are the highest yielding government-backed securities you can get. You can't get them in under $25,000 increments. Maturity is often 15 to 30 years, but you get monthly interest checks. Your best bet are Ginnie Mae mutual funds, which you can liquidate anytime. Dreyfus Basic GNMA. 800-782-6620. Dreyfus.com. Vanguard GNMA. 800-662-7447. Vanguard.com. Inflation hedged investments. There are some investment instruments you can buy that have a built-in hedge for inflation, such as the following. Bloomberg.com/markets/C13, Treasury bonds and Treasury inflation indexed securities/tips. Client.annuitynetadvisor.com/products/individual/inflation/index.asp, inflation proof annuities. Cumber.com/special/MIPS, tax exempt municipal bonds. Savingsbonds.gov/ols/ols home, buy bonds directly with a credit card. Savingsbonds.gov/sec/seccinvsr, 800-722-2678, Treasury Direct. U.S. Savings Bonds and Treasury Notes. U.S. savings bonds are safe federal government bonds, can be purchased easily for as little as $50. The interest is exempt from local and state income taxes. Federal income tax is deferred until you redeem them. There are special tax benefits if you are financing you or your children's education, and they can be held for as low as 6 months before cashing them in. U.S. savings bonds include U.S. Treasury bills, 1 year or less. Treasury notes, intermediate, 1 to 10 years. Treasury bonds, 10 years to 30 years. U.S. savings bonds rates go up and down with national interest rates. Maturities range from several months to 30 years, the longer the term, the higher the rate of interest. An EE/E savings bond is a bond where you don't get interest payments. You buy it at 50% of its redeemable value, so when you redeem it your money doubles. You can buy them directly from the Federal Reserve Bank, thus avoiding brokers and their fees. Simply contact one of the Federal Reserve Bank's 37 regional banks by looking it up in the phone book, or contact publicdebt.treasury.gov/of/strips, treasurydirect.gov. You can even open up an account where you can buy several different Treasury notes and bills and get the interest payments deposited there. treasurydirect.gov, 800-772-2678. publicdebt.treasury.gov/sav/savcalc, savings bonds calculator. publicdebt.treasury.gov/sav/sbtdhunt.htm, if you have a lost savings bond, go here for information. Bureau of the Public Debt. Savings Bond Office. Parkersburg, West Virginia 26106-1328. 800-4 US Bond. 800-943-6864. 304-480-7955. 304-480-6112. Savingsbonds.gov. publicdebt.treasury.gov. treasurydirect.gov. treasurydirect.gov/sec/secday.htm. bondinformer.com. 800-927-1901. easysaver.gov. 877-811-7283. Sign up and automatically debit your saving account to purchase savings bonds. The Savings Bond Informer, Inc. 800-927-1901. Fee-based service that analyzes individual bond holdings. They sell a book, U.S. Savings Bonds, a comprehensive guide for bond owners and financial professionals. $25. Savingsbonds.com. 900 call for bond. UIS 900-225-5426. Information about your bond at $1 a minute. U.S. Department of the Treasury. Bureau of Public Debt. Consumer Services. 300 13th St. Northwest. Washington, D.C. 20239-0001. 202-874-4000. treasury.gov/treasury/bureaus. Ask for a Treasury bill account application and a copy of the booklets. Savings Bonds Q and a book. Buying Treasury securities. Regulations governing book entry Treasury bonds, notes, and bills. General regulations governing U.S. securities. U.S. Department of the Treasury. U.S. Savings Bonds Division. 1111 20th St. Northwest. Washington, D.C. 20226. 202-634-5377. 800-487-2663. 800 US Bonds. Savingsbonds.gov. U.S. Savings Bonds. Thieves Books. epub 9249. Detroit, Michigan 48209. 800-927-1901. Book, $25. Treasury Inflation Indexed Securities/TIPS. Treasury Inflation Indexed Securities/TIPS are government-issued investments tied to the inflation rate, so they're one of the safest investments around. treasurydirect.gov, 800-772-2678. publicdebt.treasury.gov/sec/secciis, Treasury Inflation Indexed Securities/TIPS. bloomberg.com/markets/C13, Treasury Bonds and Treasury Inflation Indexed Securities/TIPS. Chapter 3. Bond Resources. Bond Brokers. Some companies that sell bonds are alamocap.com. alexdiolis.com, Canadian who lives in a yacht in the Caribbean and offers financial advice. bondagent.com. bondsonline.com. btech.com. Cardi.com, cwhenderson.com, dljdirect.com, ebandtrade.com, espeed.com, etrade.com, euromts-ltd.com, lebenthal.com, munidirect.com, northbridge.com, schwab.com, stocktrader.com, tradebonds.com, visitus.com/trip, waterhouse.com, bond resources. Try number 332.6323 or HG4651 at the library. Standard & Poor's Corp. 25 Broadway, NYC 10004. 212-208-1527. StandardPoor.com. Moody's Bond Survey. 99 Church St. NYC 10007. 212-553-0300. Moodys.com. Bond Securities and Treasury websites. Bondmarkets.com, Bond Market Association. Aboutbonds.co.uk. AmericanCentury.com, 800-345-2021, 0 coupon bond funds. Offhauser.com. Bankrate.com, bond ratings. Bankrate.com/BRM/green/investing. BauerFinancial.com, CD rates and bank ratings. Bloomberg.com. Bloomberg.com. Bluelist.com. bmarkfinancial.com. bog.frb.fed.us. Bondagent.com. Bondbuyer.com. Bonddeskgroup.com. Bondexpress.com. Bondinfonet.com. Bondinformer.com, 800-927-1901. Bondmarket.com. Bondmarkets.com. Bondpage.com. Bondresources.com. Bondservices.co.uk. Bondsonline.com. Bondsonline.com. Bondtalk.com. Bondtaracy.com. Bondtraders.com. Bondtrades.com. Bondvillage.com. Bondvu.com. Bradenit.com. Brex.com. Briefing.com. Businessweek.com. Buybonds.com. Capitaldata.com.